following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It's at a 100-point ABC up. And now it's very extended, the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7.5 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means you can enjoy the dream that is happening right here, right now. Yeah, it's a little nightmare out here in the markets, no doubt about that, folks. But the bottom line, that will change also. Market-wise, let's take a look at it out here. We have the Dow Industrials down 21.29, NASDAQ off 686, S&P's down 218, gold contract down $13, trading at $1,503 an ounce. Silver down $1.50, $12.95 an ounce. Late sweet crude off $2.74, $28.99 a barrel. Notes and bonds. You get the 10-year note up 1 point plus 17 ticks at 137.26. The 30-year bond up 4 points and 3 ticks at 180.24 in King Dollar. King Dollar down 584 ticks, trading at 98.165. Euros at 111. The yen is at 106.39, and the British pound is at 122 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. We'll start with the E-minis. It's going to be quite a 60 minutes we're having out here, folks. Why? Because the bottom line is that you had one sweet bounce that got up to a high at 11 o'clock this morning, and we got up to that price point of 25.62. Bottom line, came right back to where we had a little strength intraday, and now this baby, the battle's going to be on. The battle is on at 25.02, and right now you're at 24.83. I suspect we'll make another run up there. The real question is, if you can break that area, then you're going to have a shot to go all the way up to where we were at 11:20 this morning, which is that 25.62, which, by the way, is quite a move. No two ways about that. Let's get over and take a look at the NDX 100. Why the NDX? Because the NDX 100 is still your strongest index out here, excluding the gold market, that is. NDX 100, I'm talking about major indices. NDX 100, same type of setup. That got up to a 75.64. We're 73.17 right now. The benchmark there to keep your eye on is going to be 74.04. And you can expect very fast moves, folks, coming into these last 60 minutes of trading out here today. If we go into the note and bond market, this is kind of, no, it's real intriguing, actually, that they haven't been able to basically punch out a additional high. Market was down in an extraordinary, well, still down in an extraordinary way. It was really down in an extraordinary way at the open this morning. And that being said, the note as well as the bond market, folks, couldn't get to a new high. So what we had done is that we had finished an ABC structure on the way up. When you do that, you do something other than continue on the direction that you've been going. That being said, bottom line is that the 10-year as well as the 30-year out here, to me, this thing should have got to the highs, blew away the highs, all of the above. That is saying to me that this market is trying to basically put in a bottom right now. If we go over to the Dow Industrials, what you're going to see, we'll give you a number coming into the close out here for the Dow. And what we're going to be talking here, we're talking about the Dow Industrials has confluence, and we came down into that confluence today. We busted it by like only a few points for 20,000 point number. So we got, today what we did is this. Dow Industrials traded to 20,387. If we hold over 20,744, and we're at 21,000 right now, 047, that is going to be a rejection of the 0.382 retracement of the whole move that started in 09. That's the first part. So keep that number in mind. So 20,744. We do this now, so that's off the lows that were established in 2009. In 2009, you do the lows that were established in 2006, because 16. That's the biggest trend. That number is 2,779. We rejected that also. That's a good number, folks. That is saying that you came down to confluence, and I was actually on TD Ameritrade Network this morning, and I was explaining that, number one, how it works. Number two, though, most times when you see this, you normally spike it. What that means is that we came down to it, you spiked underneath it and came right back up over it. Now, that's what we did. So we'll see how this comes into the close. But if you can hold that, that is a good start. If we go take a look at the Dow Industrials also, what you're going to see here, and when these things line up like this, it's pretty hard to comprehend, too. But the bottom line is that they are lining up like that, meaning that you've come down to trend. And the trend I'm talking about here, I'm talking about the trend that started in 2009. And it's pretty amazing, actually. You came right to the trend line and broke it a bit, and you're going to close above it. That's impressive. If we go to the S&P almost got down to the lows that were established in 2018. And my larger take is that we're going to be in a consolidation for a couple more years. And the low of that consolidation is 2346. On the cash S&P, and the high is 33.93. We came down to 2401, where the low of December of 2018 is 2346. We go take a look at the SPY, and you set it up on the SPY. You're going to see the same type of setup in the SPY. SPY out here right now is trading down $21. We were down $30 prior to the open. The number on the SPY, the bottom of 2018, is 233. And we made it down to 237.36. So bottom line, the way that is looking out here is that that's going to be the larger. We'll flip around into that larger consolidation. We've already been here about a year and a half, but there's no reason you can't be there for a couple more years. Our phone number is 877-927-6648. Give us a call, folks. We have Dow. Dow right now down 2193. NASDAQ is off 710. S&Ps are off 226. Come right back.
Folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insight under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow is down at 21.95. Nasdaq's off 701. S&Ps are off 222. Let's go over to our man, Mr. Steve Rhodes, as we do every Monday at 20 past the hour. Don't forget, folks, Steve has an outstanding show here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. Now, the way you get Mastering Probability, folks, is you come over to our website at TFNN. You'll see it right under featured content. You just hit Mastering Probability. You hit subscribe. You can get the newsletter for 1 month for $149. You can get it for 6 months for $695, which is a savings of $199 or 22%. You can get it for a year for $1195, which is a savings of $593 or 33%. They all come with a 30-day money-back guarantee, folks. Bottom line, you get volatility. We get markets. You can check out the newsletter, get it 30 days. You like it, you keep it. You don't like it, you get your money back. It's a beautiful thing. Steve Rhodes, what's going on?
What's not going on, my friend? What is not going on?
That's
crazy.
A fact. That's a fact.
Yeah, you know, on Wednesday, on Friday, went down to one of the restaurants that we normally go to. Friday evening was the first time where I really got to see a shift in the behavior of folks. And it was a place up in Palm Beach we go to usually on Friday or Saturday nights, and it's the place is always packed.
Yeah.
And we get there about 7:30, open the door, and it's like empty as can be.
Wow.
I mean, there were people in there, and the folks that we had brought kind of thought, well, it looked like a normal busy restaurant, but it was about 30% of what it would normally be.
Right.
And I just got the email from them that they're going to curbside service. You know, they'll keep the restaurant open, but basically shuttering the place. So the way I take a look at what we're doing right now, the way I'm thinking of it is basically like this: World War III. You know, we always thought that the next world war would be, however it would be fought. Didn't really anticipate that it would be a virus, you know, this coronavirus, and it's certainly being attacked across the world. So I'm considering this from the way that the market is behaving, World War III. And so we've talked about wars and charts, so I thought it'd be a good idea to go through this, plus some other things that I put together, folks, to help understand where we're at out here. So the way that markets respond in wars, and that's why I think the market is responding the exact same way right now. If we take a look at Pearl, if we take a look at World War II, or when the U.S., when we were bombed, when Pearl Harbor took place out here, and I've got the points measured, the stock market didn't really begin to find its footing until the Navy's battle at the Coral Sea. We've talked about that before, and that's a positive. That was the market's interpretation of a positive resolution to the outcome. That wasn't the end of the war, obviously, but we can see how the market, what you and I are here taking a look at and trying to help help folks navigate through is the stock market and its behavior, which may be totally different than the mood and everything else that's going on the television screen. If we review the Dow's daily chart after Pearl Harbor. So that was a line chart just to give us a kind of a feel here. I've got identified up in the upper left hand the day of Pearl Harbor out here, the day before, or the weekend before. And what we can see here is that the market moved all the way down, and when it formed its bottom, it was with what I refer to as the Rhodes Momentum Indicator signal. And that took place on April 30th, 1942. Now, it was about a week or so later, 7 trading sessions later or so, when we had the Battle of the Coral Sea. So the market formed its bottom first with a Rhodes Momentum Indicator signal pattern, and then it was that impetus of a positive outcome and resolution that then went ahead and took the market higher. If we take a look at the Persian Gulf War, notated here is when the Iraqi forces invaded Kuwait, when the U.S. Reserve Forces were called to active duty, when we sent 100,000 troops on November 8, 1990, and then the start of Desert Storm. Well, if we look at the detail, the daily chart during the Gulf War, and the reason to do this is to take a look at the patterns that subscribers and I use, or radio listeners, and these are all programmed in my toolkit on these charts out here. The bottom formed with a Rhodes Momentum Indicator signal. That was on October 13th. That was about 2 weeks before 100,000 U.S. troops arrived, and back on November 8, 1990, and so, which was a potential positive outcome. The real positive outcome was Operation Desert Storm once that thing was said and done. So the Rhodes Momentum Indicator pattern is very important. And as you were saying, folks can subscribe to Mastering Probability. They get a 30-day free trial. And there's no more important time than right now to take us up on that opportunity to understand this pattern out here. You see, the Rhodes Momentum Indicator pattern has identified bottoms. And I've taken this back down. This is a chart going back into the 1890s. So all of these little black diagonal signals out here, I'm just trying to identify Rhodes Momentum Indicator bottoms. You can see when these come into play, and if you learn the pattern, that they've really identified very good buying opportunities. So this has stood the test of time for the last 130 years. If we take a look at the weekly chart between 1958 and 1985 out here, you'll see all of these nice bottom signals, all these nice Rhodes Momentum Indicator bottom signals. If we go take a look at the weekly chart between 2002, 2019, you can see the nice 2009 bottom, the nice 2002 bottom, the nice 2016 bottom out here. So it's a really great pattern for being able to identify bottoms. So the question is, well, where are we now, Steve? So as we take a look at the Dow daily chart, very right-hand pattern, you're going to see the Rhodes Momentum Indicator signal is present at the moment. And here, this daily chart, you're seeing other signals that have occurred during the past couple of years out here. And so spotting these have led to nice buying opportunities. And again, so there's no better time to learn to put the Rhodes Momentum Indicator pattern to work. And I'd really love to be able to teach folks. There's about 6 different workshops that subscribers get access to. Some of those will take all of those are going to teach them, Tom, about how to use this pattern, which works for all time frames out there. Now, as far as where else are we? And history teaches us so much about patterns out here. This is a logarithmic Dow chart. And this is my chart going back into the 1800s. You'll see that what I've done is I've got a trend line. On this logarithmic chart, I've got a trend line from the 1929 highs, the highs in 1966. And the interesting thing for me, Tom, is that the 87 crash basically stopped right on that trend line. It was a test and rejection of that trend line that then just simply propelled us and took us out of here. So if we take a look at the 87 chart out here, this bottom with a TD9 count, that's another pattern that I teach subscribers out there. If we try to understand, well, where are we now with regard to a logarithmic trend line? The same trend line, the exact same angle, the trend line that we looked at from 1929, 1966, if we apply that to the highs in 2000 and 2007, this shows us that trend line is approximately in the 19,210 level. Don't whether it's 210 or it's 200 or it's. But
yeah, you can give or take 500 points today for sure.
We could do that tomorrow, right?
Right.
It could easily be there tomorrow. So I think this is also another really important level to be watching for what could be the next buy of a lifetime out here. And if we also take a look, hey, where's the Dow right now? It's testing really key support, which is the rising trend line off of the 2009 bottom, which is about 20,141. So if we see it close below, I'll say 20,562, we probably get back into this 19,210 area over the course of the next couple of days. So that's what I want folks to be watching for. I want to be able to teach them about these patterns out there, and the easiest way to do that is subscribe for the next 30 days to Mastering Probability, free unconditional money back guarantee.
And it's real easy to do, folks. Come over to our website at TFNN. You're going to run into featured content. You see Mastering Probability. You hit subscribe. You get it for 1 month, 6 months, a year, all with that 30-day money-back guarantee. Steve, you have a great one, safe one, and we look forward to the show tomorrow.
Thanks, Tom. You too. Be safe.
Thank you. Stay right there, folks. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 24.29, Nasdaq up 764, S&P's down 249. Let's go to our man Frank in Gloucester. Hey, Frank, what's going on?
Hey, what a trip, huh?
Oh man, I'm telling you, there's no doubt. Yeah, this is a ride. This is the ride of the century.
I've got a couple of positions left, and they both have some solace for me. One of them is Chad, C-H-A-D, and it's been a very interesting roller coaster ride. It kind of took off in February, and then at its top, it did 100% move of the move and came back to its bottom.
Right.
And now it's taken off again. So I wonder if the volume isn't quite there to get over the high, but take a look.
Let's take a look. Chad, is the direction 300% CSI bear? No, actually, no. It's the direction
No.
CSI 300 China A share bear one time. So there's no leverage on this, folks, okay?
No, no.
Yep. So let's take a look. So got action here today, that's for sure. And that was because of the action last night. So you're at, oh, I see it. Oh, it's dying on the vine, though. Interesting, man. Yeah.
Yeah, no, this China 300, it looks like they've been, the government over there has been kind of holding it up, keeping it from crashing.
No, yep. No, it makes a difference. There's no doubt about that. This is intriguing, actually. Let me just, this is, I mean, if we stick with time of the trade here, what you have here is that you're coming into that swing point, Frank, with volume dropping dramatically, man.
Yeah, okay. I'll take my profit.
Yeah, I think I would. Yeah.
Okay.
Yeah.
Can you look at one more?
Yes.
My other one, FXE. It's the euro.
Okay, so let's take a look at the euro. The FXE, so this is the currency share euro trust. The fund is designed to track the price of the euro. Okay, so this is at 105.57. Okay, so we had a nice, I'm going to bring up the euro in general just to take a look at this, because the euro, the euro itself, I mean, it's got killed today, but that thing has been pretty strong, actually. Okay, so.
Yeah, I think there's a bad tick on that FXE that I see on my charts. But
okay, so last week the euro get all the way up to 115. That broke the downtrend. That's saying the euro wants to go to 125. Let me go back to the FXE for a second. Yeah, so this one here, it's a bad tick. I see what you're talking about this morning, right?
Yeah.
This one here, I'd stay in. Here, 2 o'clock this afternoon. See that spike right there? So that's your high for today. That's good volume. Okay. You had good volume coming, last night, 11 o'clock this morning. Yeah, I'd stay right there, man. I think this is going to break topside again, man. That's what it looks like.
Currency.
It's. I'm sorry. Go ahead.
Trend to it.
Yeah, the trend. Here, let's go over to the dollar for a second. Let me show you something, folks. So, the dollar had got under the 95 area, then takes off like a rocket ship, goes all the way up to the 98.810, pulls back, and it's like that might be it for the dollar. I was thinking it's going to test it, but that might be it, man. That just might be it for the dollar. So, you get a lot of moving pieces, but I think the whole world's in trouble right now with shutdowns. There's no two ways about that. So commerce itself, is going to be shut everywhere. And, you can make the case, well, if that's the case, the dollar still will be stronger than the rest of the currencies. That being said, though, the euro, is the only one that's in the green today. So I'd pay attention to that. I'd stay right there on the second one, man.
I keep an eye on it. Thank you very much.
Have a great one, man. Have a safe one. S&P's, folks, down 270. Let's go get that down number again. This down number is going to be important. The reason being, in the down number, we two different ones. The one I gotta write this down, so I'll get it memorized right now in my own head. So the down number that we're looking at. Oh man, we're right at it. Okay. So look at this. Ooh, this is dangerous. It's 20,744, and we're under it right now. We don't want to close under that number, folks. You close under that number, and you can get down to that next 18,000 level. So we'll see where that baby does shake out, but that is the number that's out there. Let's go into the NDX 100, because the NDX is still, well, when I say the strongest index, when I'm talking about the Dow, the NASDAQ, the NDX 100, and the NASDAQ Composite, you can certainly see that if you're watching Tiger TV on Tiger TV on my screen, all the green that you're looking at, those are the gold equities. And they've had moves that are like pretty amazing, actually. If we go look at the Gold Bugs Index, you're going to see the Gold Bugs Index had a move from 142 to 184. I mean, that is just amazing. And then we bring this back as to what it went into, and this is the most impressive part, is that it's 131, which is the swing low, and it didn't get to it. So that is pretty impressive, and that's also saying that, hey, listen, this gold market is going to continue to move higher. The XAU did the same deal. What you do have here, now this is pretty cool, the XAU went from 62 to 78, well, right now you're at 73. That is saying that the Gold Bugs Index is stronger than the XAU, which is saying that means that the actual physical metal will continue to be stronger than the, well, continue to be stronger. The reason being is that when the HUI is stronger than the XAU, bottom line, that is a leading indicator that you have the aspect of gold going higher. If we take a look at Franco-Nevada, another monster move out here. Franco-Nevada just went from $77 to $99. Yeah, you heard that right, folks. One big number. And what the market is getting out here, well, this has already happened in the marketplace, but the bottom line is that over in Europe, bottom line is that France is restricting any type of movement whatsoever. So that's putting a little kibosh and some heavy pressure on these markets. There's no doubt about it. We take a look at some of the higher volume equities in this market out here today. You have Bank of America is down $3.80. You get Apple down 29 bucks. Microsoft's down 19. Excuse me, folks. ExxonMobil's down $3.50. You get Occidental down $2. Big numbers out here. Let's go take a look at IBM. I haven't looked at IBM for quite some time. IBM, yeah, trading at down 750, trading at 100 bucks. Pretty amazing. This thing. So this is you broke a couple solid swing points. Yeah, this is going for the highs of the lows of 2008. Amazing. Stay right there, folks. Come right back. Dow Industrials right now down 2,700. You get the NASDAQ off 850. S&Ps are off 282. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow's down 26.93, Nasdaq's up 845, S&Ps are off 280, and as this thing keeps moving, you just had Trump in the in the White House. He's saying avoid social gatherings of more than 10 people now. People should also avoid travel. Trump says as he announces new guidelines, it's bad, Trump said. So bottom line is that you're seeing a little bit more selling pressure. No two ways about it. Let's go to Jim in Palm Harbor. Hey, Jim, what's going on?
Well, it's a nice day to be walking on the beaches, huh, Tom? A lot of fresh air, sunlight, UV. But local observation, went to a couple coin dealers toward the end of last week, and they are out of American Eagles because the U.S. Mint has stopped because they've run out of blanks for Silver Eagles. So I went to our local coin dealers on West Bay Drive. Both of them no longer have U.S. Silver Eagles to sell, and between Friday, Saturday, and today, they no longer have Gold Eagles or St. Gaudens or Double Eagles for sale either.
Well, the St. Gaudens, no one ever has a lot of those. I mean, what about Maple Leafs and, the South African Rands?
They're going with those also, yeah. And they also don't want to take orders on.
I can see them not taking orders. So what we're talking about here, folks, is this. This is what ends up happening when we're trading the markets. When we say where gold is trading, that's the future price. So what ends up happening is this, is that no dealer in their right mind is going to take an order when you have a gold contract that has gone from 1450 to 1575 in one day, period. That's what happens every time. I mean, when it's a decent indication that if they won't take orders, that you're close to a bottom. That's what I've found more than anything, Jim.
That's what I took that as a confirmation on Friday and Saturday. So I actually feel very happy with a couple.
Right.
I've got an 1897 and a 1928 for 1605. I'm very happy.
Yeah.
With a couple gold coins.
Totally. Cool, man.
So, and then you see it in the futures market where we bounced off of that 1450, and now we're 1495.
Oh, the gold equities. You can make the case that the gold equities were the last ones to get croaked. They're the first ones to come out. So we'll see whether the gold equities can pull up some of these other sectors. We'll find out.
I haven't had a chance to look at the silver chart yet, but we spiked down to 1170. Where do you see support on silver?
It's still a mess. Silver's a mess. Okay. Period. Yeah.
Just avoid silver.
Yeah. Silver is that's a crapshoot all the time. It really is. Yeah.
But they're looks like they're going to try to make the run back on I'm looking at the Dow at 20,000. What are we at? 20,650.
Yeah, I want it over that 700 number. We'll see. Yeah.
Okay.
Cooking, brother.
We still have time.
Have
I think they're going to make it.
That's a beautiful thing. Totally.
Thanks.
Let's go to Al in Tampa. Al, what's going on, brother?
Oh, not much. Getting ready to close on my duplex up in Homosassa, where you were talking about yesterday. It's beautiful up there, and
it is
good food and everything else. So, and we're going to be building our dream house. And my mortgage broker let me know that because they dropped so much, I can get what I was going to get for $500,000. We can go ahead and add on. We can build a $600,000 house. So, it's a good thing.
Pretty cool. Right? There's no doubt. So, and your Harmony, this is interesting, folks. Look at Harmony, too. Harmony just went from 207 to 265 today. So, we'll see if that sector can drag up the other sectors. But the bottom line is that you finally got one sector that is moving. And these moves, folks, are just absolutely amazing, no doubt. So you're looking at COG?
I can't figure out what's going on unless someone's going to be buying it. But also, too, is remember when the market dropped down when I was talking about it separating in that and then going into actual physical coins? Remember the consolidation? It was a lot of the mines that started consolidating and buying each other out. Do you remember that?
Say that again now.
Remember we got down to this when the destruction and that the mines started buying each other out, and there was some consolidation. Do you see any of that this time?
No, because just because what happens when you have consolidation, you have to be pretty confident that things are cool. And what happens at a hit like this is that even let's picture this thing comes back. Let's say the next month and a half. Everyone, I'm talking about everyone, not just in business, I'm talking about all of us in general. You get a different mindset, and that mindset is you're holding cash much tighter, you're going to take less risk, and then it takes a certain amount of time for that to release again. This is a whole different animal. There's going to be plenty of folks that, got hurt, have been hurt, which is sad, and that changes the aspect of what type of risk profile you're dealing with. So, and the same with companies.
I was thinking maybe like GPL or something like that. Somebody might see it as a deal and go ahead because they're in Mexico and they're in the U.S. and a few other ones there that they'll go ahead and offer to merge with them or buy them out outright. You'll get a merger or something. But
no, what you're saying is real, and what he's saying, folks, is that the market caps are so small now that bottom line is that you can come in and buy some of these companies for very inexpensive money. When you start looking at market caps, it's like, wow, hold it, man. They got an operating company, they're taking in cash. Why wouldn't I buy them? It seems to happen, Al, each and every time this happens, that you have a few people that do that, no doubt. But most people don't. Warren Buffett could probably come in and buy half the S&P right now. That's probably an exaggeration, folks. Okay, but the bottom line is that it's real because he has so much cash. So, I suspect what we're going to see, you're going to see some credit crunches out here. The Congress has to come in and do something. That's the real bottom line. I think the biggest thing that we'll see, they're talking about cash handouts. That'd be the quickest way that all the restaurant workers and the people that, as they're shutting down cities, would get paid. And,
they did that one time with the income tax. Remember that? It was like $200 or $400 that they issued cash and stuff like that with your income tax. Remember that?
No, I do. And I think, this time I'm hoping they're serious because, all those workers, we have plenty of money, man. They get the print and press, that's the real bottom line. They have to do something for all these folks that have tossed out of work because guess what? Whether you have 3 days or 7 days or 10 days, whatever that is, a lot of people don't have more than that. And they got to get cash in their hands. ASAP. Thanks, man. Have a great one. Have a safe one. Dow right now down 2,600. Nasdaq's up 833. S&P's down 276. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 2,800. We're going to the lows of the day out here, folks. Nasdaq off 877. S&P's down 285. And you get to Amazon. Amazon just came across the tape. They're hiring an additional 100,000 employees in the U.S. They also plan on the average pay right now, I guess, $15 an hour. And let's see. Yeah, in the U.S. it's $15 an hour. So bottom line is that, needless to say, there's plenty of folks that are ordering online in a huge way. The 100,000 new jobs come, of course, as the retailers and in general have been closing down, including Apple, Nike, Lululemon. They're closing all their stores. So this is a pretty heavy deal. There's no two ways about that. Let's go over and take a look at that S&P, because they're smacking that S&P coming right into the close. We take a look at this. ESH0. Okay, so yeah, you're closing at the lows. That's not good, man. Bottom line is that you had the spike low out here this morning of 2360. The next print out there came into the 2441, 2411, and we're 2405 right now. So it's basically right at the print that we were laying out at 950 this morning. Dow Industrials, we take a look at Dow. I'm going to just do this one more time before we get off here quick, because I know that the first confluence number, we've broken that baby, and we're going to close underneath it. And the second number, yeah, you've broken that one also. So 20,007, yeah, it's the 20,700 level we need right now at 20,320. What you get off that, folks, I mean, if you get a chance to get a pop in the morning, but when you do get off that, the problem with the Fibonacci sequence, it's not a problem. But you break one number, you can go to the next number, which is not cool. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. You might as well have a blast with it. Have a great night. Have a safe night. Come back and visit us. 8:30 tomorrow morning. Tommy kicks us off. Great show. Bam! Go get him, folks.